Within the ETF world, there's been a lot of innovation. There's now these leveraged single stock funds, also single sector ETFs that really allow people to bet unidirectionally in a big way. Are they exacerbating the sell-off? Because there's a lot of inflows going into names like NVDL or SOXL.
Yeah, it's a great question, Scarlett, and it's difficult to say whether or not that ETFs in this instance, these very niche single stock ETFs, are the proverbial tail that's wagging the dog, or if the tail is even attached to the dog for that matter. Ultimately, fundamentally, what we know is that it's investors' reactions, their opinions that are going to inform prices over the long term. Can we see short-term dislocations that are driven by impacts of things like new products, new ways of accessing and driving new money into or out of these individual names? It could very well be, but what we don't see anywhere right now is any clear smoking gun to provide us evidence that that is indeed the case, that the tail is wagging the dog, or in many cases, especially for broader ETFs, that the tail is even attached to the dog.
Ben, it's Eric here. I wanted to get your take on buffer ETFs and even the equity premium income ETFs like JEPI. These are both designed to help you on days like today, to help you sleep at night so when this kind of a day happens, you're not hit as hard. I'm curious Morningstar's take on these products. Do you think they serve a purpose in a portfolio, or do you guys generally stick to, hey, just use treasuries and other things to diversify?
Yeah, Eric, it's a great question. I think investors ultimately have to understand what it is they're signing up for and what they're giving up in the process. And generally with the buffer products in particular, what they're giving up in the process is participation in the long-term upside of equity markets, in particular when equity is the underlying of the buffer product. So if it helps you sleep better at night, that's great, but just know that over a long enough period of time, you're probably going to wind up leaving a lot on the table. So as is ever the case, investors need to know that they're going in to something and go into this with eyes wide open, know what they're getting, know what they're giving up in return. There's trade-offs in everything. And I think these buffer products, which effectively in my mind are just a kinder, gentler form of structured products now packaged in an ETF wrapper that are less costly, more liquid, and every bit as tax efficient, as traditional ETFs are expected to be, that nonetheless there are still trade-offs even in this kinder, gentler way of consuming structured product type outcomes.